Howdy, everybody. Welcome to Liberty Call. Today is January 9th, 2025. Hope you're having a fantastical day in the interwebs. It is very snowy here in Colorado. Not too deep, but it is cold and windy, and it's blowing the snow everywhere. So hope you're having a fantastic day. All right. Well, U.S. markets are closed today for National Day of Mourning for Mr. Jimmy Carter, but futures dipped slightly with NVIDIA feeling the heat from potential new chip export restrictions. Bank of America is dealing with over $100 billion in bond losses thanks to rising interest rates and the Fed's top financial regulators stepping down next month, pushing for tougher rules. Meanwhile, Elon Musk is eyeing a possible bid for Liverpool FC, and the UK assures everyone that their markets are just fine. Nothing to see here. All right. So before we jump into the markets the news, since the market's closed, I need you to do me a favor. Give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. All right. Let's hop into it. First article here, Treasury yields retreat, dollar strengthens with investors weighing Fed moves. All right, U.S. Treasury yields declined from an 8-month high on Thursday, with the benchmark 10-year yield falling to 4.689% after peaking at 4.73 on Wednesday. Markets are cautious ahead of Friday's U.S. payrolls report, which will offer insights. Why do I have it like that? Which will offer insights into the Federal Reserve's future rate cut plans. Currently, markets are pricing in just one 25 basis point cut here in 2025. Federal Reserve policymakers expressed concerns during the December meeting about inflation risks stemming from President-elect Donald Trump's proposed tariffs and immigration policies. These policies, they warned, could prolong the fight against inflation, which remains elevated. A sell-off in U.S. Treasuries on Wednesday followed reports that Trump is considering declaring a national economic emergency to implement broad tariffs. Despite these concerns, some analysts, including Drew Matis from MetLife Investment Management, believe recent Treasury yield increases may have been excessive. The U.S. stock market was closed on Thursday for the funeral of former President Jimmy Carter. Meanwhile, European stocks rose, with the stock 600 closing 0.42% higher, led by gains in healthcare and basic material stocks. The U.S. dollar strengthened, with the dollar index rising to 109.17. The euro fell 0.18% to 102.99, and the British pound faced a significant three-day decline, reaching 1.2303 amid concerns over Britain's financial stability. In China, the yuan steadied near a 16-month low as the central bank took steps to support the currency. Oil prices climbed more than 1% due to increased winter fuel demand in the U.S. and Europe. Brent crude rose to $77.14 a barrel, and West Texas Intermediate reached $74.16 a barrel. Gold prices also increased, with spot gold up 0.31% to $2,670.09 per ounce, reflecting ongoing economic uncertainty. All right. So that was everything there. Was there anything that I wanted to follow back on? The dollar continues to strengthen. And, primarily my hypothesis would be is that simply the other currencies around the world are just doing worse. So it's not necessarily that the dollar is great. It's that the others are they have more inflation, more debt, things like that. I mean, granted, we have a lot of debt here too. So, all right. Next up from Investopedia, the job market got even more stagnant in December. All right. Where's my notes? All right. Here we are. Employers announced the fewest hiring plans since 2015, with U.S. companies planning 769,953 hires in 2024, down 1.3% from 2023. According to Challenger Gray and Christmas, layoffs, however, increased by 5.5%, with 761,358 job cuts announced, the highest since 2020. The job market remains stagnant, with fewer new hires, fewer mass layoffs, and lower quits rates than previous years. Economists attribute this uncertainty surrounding the incoming Trump administration, leading many employers to adopt a wait-and-see approach. Companies are keeping job postings open, but being more selective in hiring, according to Justin Begley of Moody's Analytics. The job market has cooled significantly from post-pandemic hiring surge, with reduced levels of hiring, firing, and quitting compared to the pre-pandemic times. Despite the rise in layoffs, Begley notes that dismissals are concentrated in 4 key industries: technology, retail, healthcare and products, and financial services. Broader labor data from the Bureau of Labor Statistics shows layoffs near record lows as recently as November. The Challenger report serves as a precursor to the more comprehensive BLS December jobs report, which economists consider the gold standard for labor market data. The BLS report is expected to have a significant impact on financial markets, providing clear insights into the current state of the U.S. job market. All right. So it's kind of uncertain right now. Well, I got more good news for you. From S&P Global, U.S. corporate bankruptcies soared a 14-year high in 2024, 61 filings in December alone. All right, this is a fairly short one. Let's see here. Corporate bankruptcies filings in the U.S. surged to a 14-year high in 2024, with 694 filings recorded throughout the year, according to S&P Global Market Intelligence. December saw 61 filings, including a steady trend from continuing a steady trend from previous months. The 2024 total surpassed the 635 filings in 23 and the 638 in 2020, a year heavily impacted by the COVID-19 pandemic. The last time filings were this high was in 2010, following the Great Recession. Elevated interest rates significantly pressured companies in 2024, with total debt among credit rated non-financial U.S. companies reaching a record $8.453 trillion. Although the Federal Reserve began lowering interest rates in September, relief may be slow to materialize in 2025, limiting the benefits of monetary easing. Notable bankruptcies in December included Party City and China Construction in America, both filing Chapter 11 reorganizations with over $1 billion in liabilities. Party City struggled with macroeconomic headwinds despite a 2023 debt restructuring, leading to the closure of approximately 700 stores. China Construction America filed for bankruptcy as part of the ongoing litigation with BML Properties Limited. The consumer discretionary industrial sector led bankruptcies in December, with each accounting for 9 filings. These two sectors combined for 199 filings last year, representing 28% of all bankruptcies. The healthcare sector followed with 65 filings last year, adding 2 more in December. Inflation and shifting consumer buying trends made consumer discretionary companies particularly vulnerable to economic challenges. Well, that's not good news. All right. One last article here, just some food for thought from the Mises Wire. Politics won't solve our spending problem unless we make them. And this was written by Mr. Connor O'Keefe. Let's see here. The U.S. House of Representatives recently voted to keep Mike Johnson as Speaker, with almost all Republicans, including moderates, Trump loyalists, and the Freedom Caucus supporting him. However, Representative Thomas Massie, the greatest living congressman currently, stood alone in opposing Johnson's leadership. Massie faced backlash from both establishment media and Trump supporters for his dissent, but his reasoning highlights deeper issues within the Republican Party. Johnson, like many Republican leaders before him, promised drastic spending cuts and government reforms. However, past action suggests these promises may be empty. Johnson's predecessor, Kevin McCarthy, had agreed to introduce 12 separate budget bills to curb bloated spending. Yet, when faced with government funding deadline in late 23, McCarthy reverted to push an omnibus spending bills, ultimately leading to his removal as Speaker. Johnson's early tenure mirrors McCarthy's mistakes. He initially split a large spending bill into 2 smaller minibus bills, but failed to appease fiscal conservatives, relying on Democrat support to pass them. More recently, Johnson attempted to push through a massive 1,500-page spending bill, which Trump opposed, forcing Johnson to scale it back. Despite this, Johnson secured a continuing resolution with an additional $110 billion in spending, again leaning on Democrat votes. Massie's opposition to Johnson stems from the belief that Republican leadership lacks the courage to follow through on meaningful spending cuts. Massie himself has a track record of standing firm on his principles, even when it meant facing backlash. He notably opposed the unprecedented COVID-19 relief spending and refused to support foreign aid exceptions for Israel, earning him both criticism and political opposition. Massie's defiance underscores a broader issue. Most politicians talk about fiscal responsibility, but fold under pressure from the media, donors, and interest groups. Real change will require voters to hold Congress accountable and apply consistent pressure to push for spending cuts. For the spending cuts politicians promise but rarely deliver on. All right. I wholeheartedly agree. You know, they get to Washington and then they don't do anything. And then all they continue to do is rob the taxpayer and push us further and further into insolvency. So anyways, and from a financial planner's perspective, it just drives me nuts, because this could have been solvable, or this is solvable now. It's going to be more painful than if we had solved it 5 years ago or 15 years ago, but it could be fixed. It just requires the will and, someone to actually, talk tough or, have a come to Jesus meeting with the American people. So anyways, all right. Well, that's everything I had to cover for today. Like I said, the markets were closed. There wasn't much going on. So we covered, basically global markets, some job stuff, corporate bankruptcies, and what our politicians aren't doing for us. So if anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get back on financial track or take you to the bus or to the train station in the first place. All right. Well, hope everyone has a wonderful evening, and it's going to keep snowing here for the rest of the day. I'll probably clear the driveway tomorrow. So just wait for it to all finish falling from the sky. So hope everyone has a great evening. I'll talk to you next time. Adios.